Hello and welcome to another one of my videos. This video is going to be a follow-up from the last video. It's probably going to be very aimed or centered towards people from the UK. So sorry if you're watching from abroad, it's probably not going to have much relevance to you. But I wanted to talk about the changes in the capital gains tax in terms of what the government is planning. Now this has been covered by other channels. I want to give you the kind of route I would take if I wasn't a dealer, if I was still a stacker like I was when I first started. Now, the government has dropped the capital gains tax limit from, I believe it's 12,000. They're going to drop it to 6,000, then they're going to halve it again to 3,000. This is kind of an issue, and it's kind of changed my views on the strategies that I would use. I've always been a big believer of you should go for the most profitable coins. And unfortunately, and where some people fall short is they kind of stick to British. It's a bit of a red herring in the sense that they get pulled in by that capital gains tax free idea where they're like, well, I won't have to pay tax on it, but it doesn't fundamentally make it a better investment. So, for example, just give you a perfect example, as I've recently bought a couple of 10 ruble gold coins from Russia. Now, I can sometimes pick them up for 450. It's not often, but sometimes I can. They're a 550 to £600 coin. Those coins are not capital gains tax free. And if I was a stacker, if I could pick them up at 450, so if I can pick them up at 450, I'm buying them from some other dealers where you can go online. I have no advantage over any individual when buying these. It's just I spend more time searching for them. Now, if you can make £150 on 450, it's kind of the equivalent of buying, give or take, let's say a sovereign and a half. Sovereign and a half, you might make £15 profit on it. Now, that doesn't take into account how long you hold. So, for example, if you're buying and buying and buying and buying, and you get to the point where you liquidate and spot is up, say you're going to make £50 a coin. But if you were buying, say, the 10 ruble and you're making 100, 150, you're getting more bang for your buck, but it doesn't qualify for the capital gains tax free element. At £12,000, that's quite a lot. Now, the average person, and let's talk realistically, let's just call it what it is. The average person is going to be nowhere near that £12,000 allowance each year. All you have to do is be strategic prior and sell what you need to just to keep under the threshold. Quite easy at £12,000 for the average person. I'm not including the stackers who want to sell in one go. If you've been buying for 30 years and you sell in one go, the reality is you probably should be buying silver Brits, the CGT3 coins, or sovereigns. But if you're someone who likes to change what you own, and most people do, they buy something, they change tact. You don't have much leeway on 3,000. So my rationale now, if I was stacking, would be to run more of a hybrid approach. I'd have probably more Brits. I'd probably move more into gold as well. I'd kind of keep less and less of the international coins. Unfortunately, the UK government is broke. They've got to get the tax from somewhere, and I feel they've done it in a stealth way just to rob the poor person. Now, at £3,000 a year, say you've bought some Perth Lunar coins. I always use Perth as an example because they tend to do well. You hold them for a few years, you tend to do okay. There's not many of them. You buy them and you make a loss if you're prepared to hold them. So say you buy, let's call it 100. Most people won't buy 100. They just won't. But say you buy 100 and it goes up £10 a coin, which is realistic. That can happen. It's not out of the bands of what might. I don't like talking in the lands of la. It kind of annoys me. So I want to use good examples. But you got 100, you sell it at £10 profit a coin. It's only £1,000. Now, if you're doing that consistently and you've got hundreds, if not thousands, of coins you want to liquidate, it gives you less flex in terms of not paying the tax. So I think moving forward, you need to have a look at your stack, and you need to know what you paid for these things, because the reality is if you sell a load of coins and the taxman bangs on the door and says, well, actually these are not CGT free and you owe us X amount, it's not good for anyone. You need to have proper record keeping. But in terms of should you buy more CGT free, yes, that is the bottom line. Do I think you should only buy CGT free coins now? No, I don't. I think it's a poor strategy. And also, you kind of want coins that you can argue about the price, in a sense. Let's go back to the 10 ruble. If the 10 ruble, say you pick it up at, say you had a real bargain, you pick it up for £400. It can happen. It can happen. And there's people selling for example, 525, 550, 600. It gives you more leeway to get closer to 550 if there's some on the market for 600. That's within the realms of respectability when selling, and someone would look at, not everyone, but someone will look at it and say, it's a fair price. I'm happy to pay that. With Britannia's, with CGT free coins, the market is very liquid, very, very liquid. But what you need to understand is if something's very, very liquid, it means there's a very tight spread. If there's a very tight spread, there's no leeway to kind of get out and make the profit that something is probably worthy of. So say, for example, you buy Brits on the secondary market, you get them for a steal at 24 and you sell them for 25. Is your money better off going into the non-CGT coins where there's less liquidity but more profit? Because you can lower it, you can just lower it. But do you want to go into that scenario and have kind of a better basket of goods, hoping that some of these coins are going to do far better than your CGT free? Or do you want to say, I can't be bothered with it, I'll just do the CGT free regardless of the drop? I know what I'm going to do. I'm going to try and tailor it so the portfolio is geared towards the coins that are the heavy hitters and non-CGT free, and then balance it out with, for example, Silver Britannias and Bullion sovereigns. I think that's the best strategy to take. It does depend on your situation. It does depend on how long you are holding for as an individual, though. So if you're one of these people like, I'm just going to sell in one go, I'm going to stack and stack and stack, I'll collect and collect and collect, I'll run a hybrid approach, and then one day you're like, I want to sell a lot, you're not doing yourself any favors by leaning towards the international stuff. You're just not. But if you're savvy about it and say, well, actually, I'm going to stack and stack and stack and kind of treat it like a mini pension, you're going to bypass the CGT free anyway. It all depends on how you come to sell. And if you're someone like me, even before I was a trader, it's probably how I went into being a trader. I like to switch it up and get things in and think, I want something else now. I'm going to change it out. The reality is, if you're making £3,000 from non-CGT free coins and you're consistently trading, you're a trader anyway. So you're going to be hit with what I'm hit with, in a sense. They're going to treat it as a business, which, do I agree with? No. But there is leeway if you're stacking and collecting and you just sell down each year. That's going to be okay. So yeah, what's changed? The CGT is dropping. The limit is dropping. Is it going to affect you? Some people it will, but the majority of people it's not going to, even at 3,000. Does it mean you should be pushed into CGT free coins because you think they're a better investment because you won't have to pay the tax? Or realistically, are you going to pay the tax anyway, even if you're selling down your collection? £3,000 on a lot of coins. I work on a 10% margin. Do you have a £30,000 collection in international coins? That's the reality. So think about it, protect yourself, but you need to look at your own individual situation. I think it is a red herring. I don't think it's great, but the way I see it is you probably should lean more towards your silver Brits and your sovereigns, but don't shoot yourself in the foot by thinking it's the be all and end all, because it really isn't. You need to be clever about these things. and there's many coins on the market that will make you a better return if that's the route you're going down than CGT-free coins. Anyway, I hope you have a wonderful new year. 2022 has been a bit of a rough one, I think, for a lot of people, myself included. And I'll see you on the next one.